Hello, this is Mark Adams at Next Level Business Advisors, and I wanted to share with you today 3 ways to find out if your bookkeeper is doing a good or a poor job. And I came to this conclusion because at the end of the year, you're focused on next year, perhaps financial projections, and you need to make sure that your bookkeeping is in order, not just for this year, but to understand how you can grow and prosper in the upcoming years. So I wanted to share with you 3 ways that you can quickly tell if your bookkeeper is doing a good or a poor job. And if they're not doing a good job, I want to guess 3 ways that you might be negatively impacted. Tell me if you agree. I'm going to share my screen with you now so that we can look at a set of financials together. And the reason we look at financials is because this is the result of the work of your bookkeeper. The first thing that we're going to do to determine if your bookkeeper is doing a good job is to look at the asset portion of your financials. If you go to your bank account portion and the number is negative by a large amount, it's an indication that your bookkeeper is not doing a good job. Okay. Sometimes what we'll find is that you can run in the red. You might be in the red, but that shouldn't be a regular occurrence. So if we're opening up in the middle of the month, the 15th of the month, and we go to the end of the prior month and the balance sheet is in the negative, your bank account, it's an indication that your bookkeeper might not be doing a good job. Perhaps they're not recording all of your deposits. Perhaps they're double paying expenses on the books, even though that's not a reality. Another reason that we might see something like this is that someone has discontinued one bank account in the financial system, started a second account, and are running here. The problem is that this still shouldn't be negative. It should be at the very worst 0, because we would move that money from one account to the second. If you have multiple debt accounts on your balance sheet, your bookkeeper might not be doing a good job. The second thing that I want to turn your attention to are the liabilities portions. Now, liabilities obviously are what you as a company owe to others. If you go to your liabilities portion and you see something like a negative liability, it's an indication that your bookkeeper is not doing a good job. Why is that? Because very rarely do we pay so much to our vendors that we're expecting that many refunds. So when you look at your liabilities, if you see a number of negative transactions like this at the balance sheet level, it's an indication that your bookkeeper is not doing a good job. If it comes down to negative loans, and I see this quite often when I'm reviewing bookkeepers who are newer in the bookkeeping world, in the accounting world, what it means is that they're not properly allocating interest and expenses. What that means for you is that you might be losing out on deductions that you deserve. The third and final way that we're going to talk about today that might indicate whether your bookkeeper is doing a good or a poor job focuses on bank reconciliations. At the end of every bookkeeping cycle, all of your asset and your liability accounts should be reconciled. If you can go to your accounting program and find a report like this, then we're at a good start. Something that gives you your reconciliation detail that says that this company has been reconciled through this period is very important. There are very many times when I will start looking at a client's files or a new client, I'm reviewing their books and nothing has been reconciled. Why is that a problem? It means that it's very possible that income or expenses are not actually entered in your accounting system and your numbers are wrong. The reconciliation program is just that. It's designed to help you to understand that everything that is supposed to be in and out of your accounts is reflected in your accounting system. One final thing with regards to the accounts, the bank reconciliations. If you go to your account reconciliation and you're reconciled through the end of a period and you find something like uncleared transactions, you see that highlighted here, and a tremendous amount of transactions that predate your closing period, it's an indication that your bookkeeper is doing something wrong. So review those 3 things. Make sure that your bookkeeper is doing their bookkeeping right. Now, suppose you review those things and you find out that they're wrong. Here are 3 things that I wanted to guess, and you tell me if this is the case for you. 1, you're not doing tax planning for this entity. How can I be so bold as to make that statement? If your accounting is wrong, If we don't have all of your income and all of your expenses, we don't know how we can adjust and amend or reflect changes in your bottom line. So we can't help reduce taxes. Second, you probably are not aware of the profit margin of your business or your practice. Why is that? Because your profit margin has to be an accurate reflection of your income and your expenses, your net income. If we don't have those things properly entered in the accounting system, there's no way we can do any type of analysis. Thirdly, you probably do not have a profit improvement plan in place. Why? Because if you don't have a good bookkeeper and you're not aware of it, we're going to be pretty comfortable in knowing that you're not reviewing your financials on a regular basis. They say that accounting is the language of business. The better that you know the language, the better your business will be. So we encourage you, if you don't have a good bookkeeper, find one. Doesn't have to be us. If you want to review your books with someone who's adept at doing that, take advantage of this video and give us an email or reach out to us on our website, nlbusinessadvisors.com, and set up an appointment, and we will help you understand if your bookkeeper is doing a good job or not.